All right, so we're talking Bitcoin. This has been the headline news this week, hitting all-time highs. It's been a really volatile trade. Do you look at the parabolic move that we're seeing, Raphael, and see some substance behind it? Because right now there's a bunch of different narratives out there, whether they believe in this rally.
Yeah, I think what we are saying, Tom, is this is the realization by market participants that we have a new savings technology that it's available for in the financial stage. And with any new asset, any nascent asset, right, it will bring volatility. So if you see any new tech stock, any new technology that came in, right, people realize the value of it. Volatility, I think it's a feature of that and not a bug. And Bitcoin is a new savings technology that it's coming up, and I think it's coming up for a total addressable market that includes other savings technologies like real estate, like gold, like silver. Bitcoin just surpassed the silver market cap, bond stocks, right? And this is a massive market, and Bitcoin is still a tiny drop in the ocean of liquidity of all the assets out there. And as it happens, as more people realize that, you are going to see some volatility through the pricing, right?
Yeah, and Raphael, I think that's the knock against Bitcoin a little bit is that a lot of people don't understand that it might be this asset class that's a store of value at this point, like gold, as you mentioned, like bonds. It maybe should be in people's portfolios. We have ETFs that have now been approved and are trading, so it makes it a little bit more comfortable for investors. But what would you tell traders and investors out there that, hey, this is here to stay and it is a viable asset class that maybe that should be in your portfolio?
Yeah, I think looking at the volatility and thinking it's a bad thing, I think it's missing the whole picture. I think volatility in this case is a good thing. And I'll tell very few of our investors complain when they see volatility in most asset classes to the upside. They don't like volatility, of course, to the downside. But you don't get one without the other. So if you are going to have a new asset and you are going to have an asset with a lot of upside potential, that's inherently going to have volatility for both sides, through the upside and to the downside. Now, if you just look on a historical perspective, right, and if you look at Bitcoin as an asset class and how it has performed compared to other asset classes, I think one of the best features is the lack of correlation that it actually has to all the major asset classes out there. And that's true if you compare it to stocks, bonds, right, real estate, any other asset class. And on a portfolio perspective, and again, just purely looking at the historical perspective, it of course has its own flaws. It fits in a portfolio. There's no question about that. It's one of the assets that has the best Sharpe ratios that you can ask for out there. The Bitcoin Sharpe ratio is better than most of hedge fund managers that you see out there that people are paying 2 and 20 to get the privilege of getting exposure to those managers. And here's an asset that it trades 24/7. There are no gates on it. Anybody can buy it. And with the ETF coming in, I think one of the issues that we had in previous cycles is that getting access to Bitcoin for a lot of people out there was a challenge. They had to go out, open an account on an exchange like Swan, right, and understand how to do that. And I still think that owning Bitcoin in a self-custody way is the best way to do it. But the ETF brings out a whole new set of investors that could come into Bitcoin. I say that up until the ETF, getting into Bitcoin is like a concert. That to get into the concert, there was a very narrow door and only a few people can get in, and the stage was a small stage. Now, not only we widen the doors, we knock the walls down, and it's like we're moving from Carnegie Hall to a concert at the Central Park, right?
Yeah.
So a lot more people are going to come in, and this is I'm super excited to see what this next bull market is going to bring to Bitcoin, because I think it's super different than the previous ones that we've seen.
Yeah, a little bit more conviction as a viable asset out there. And you've seen, we talked about the volatility in here. If you look at the boost in liquidity that people and traders and investors have now with equity markets at or near all-time highs, that's probably helping. The ETFs are definitely helping spur demand here a little bit. Give our viewers here a little breakdown on the halving, because I think that's one of those educational talking points that a lot of people don't get, because it creates scarcity, and maybe that's why we're seeing the parabolic move to the upside. But give our viewers a breakdown here of halving.
Yeah, and I'll start because I think that's one of the key features on the monetary policy of Bitcoin, right? And Milton Friedman used to say that when you look at inflation, the biggest issue with inflation is not only the level of inflation, but it's uncertainty around inflation, right? If you know prices are going to go up by a certain percent, that it's exactly right every month, right? Then you can plan around, economic participants can plan around it. But it's when it's uncertain. In one year you have 2% inflation, the other one you have 10% inflation. You don't even know, if the inflation measures that you're using are the right ones or the good ones to really, compare to what your purchasing power would be. That creates a massive issue for anybody setting prices and prices information at the end of the day. I think one of the most beautiful things of Bitcoin is that monetary policy, it's not only known, it's written in code, right? We know exactly what it's going to happen, exactly when it's going to happen, at what block height it's going to happen. And we're going to go through the halving now, which happens approximately every 4 years, where the issuance of Bitcoin on new blocks that goes out to miners goes from 625 to 318 Bitcoin per block. One block is found every 10 minutes on average, which just means that, again, the new issuance of Bitcoin is going to go down, and the inflation rate of Bitcoin is also going to go down, right? But I think, as I said, the most important piece here is not that inflation is going down. The block reward compared to what we have out there in terms of Bitcoin is already fairly small, and it's going to be even smaller. But the fact that, this is an asset that has been around for 15 years, the monetary policy of it has been tested, trialed. A lot of forks have happened on Bitcoin, right? And the monetary policy of Bitcoin has not changed and cannot be changed. I think it's the most important piece here.
All right, Raphael, real quick here before we let you go, what's next for Bitcoin? Because maybe some consolidations warranted after that parabolic move. We're down just a little bit here. Is that what you're looking for? Or, do you have a price level that you're looking at?
Yeah, after being Bitcoin for a long time, I can tell you that price prediction Bitcoin, as I said in the beginning, given it's a new asset, and it is going to have volatility, price predictions are usually going to be wrong, and mine is no different. If I make a price prediction, it's definitely going to be wrong. But what I can tell you is when we compare Bitcoin to all the assets I mentioned before, the upside potential is gigantic, and I still think that we're super, super, super early on this. It's a 1.4 trillion market cap compared to 320 trillion in real estate, right? 100 trillion in stocks. So if you just put that in perspective, even if there's a very low probability that Bitcoin is going to capture some of that monetary premium, it should already be trading, at much higher levels than it is trading right now.